Sanger is with us, managing partner at Geosphere Capital Management. Arvind, good morning. Great to have you with us here. Thanks very much for your time. You know, the global markets overnight were absolutely quiet. So if you may, let me start with something local. The Kotak news, which came yesterday from the Reserve Bank of India, I'm sure you saw it. The bank, RBI, has essentially asked them to stop onboarding new clients through online and mobile platforms. They've also asked them to stop issuing credit cards. There's a comprehensive audit which is needed with the prior permission of RBI, and then post that, they can resume. This is similar to what we saw with HDFC Bank, and that issue saw almost a year and a half plus to get resolved. Your thoughts, prima facie, Arvind, on this one, Kotak Bank?
Well, it's clearly not a positive. It's clearly something that's going to take a while to work through. I think the RBI has been quite active with some of the NBFCs and some of the banks in terms of making sure that they have a good handle on a lot of the KYC and all of this onboarding. So I think it's going to put, frankly, it's going to put the Kotak Mahindra Bank on the back foot for a while. But I don't think it fundamentally is a structural problem at Kotak Mahindra. I would say that it's not a stock that we are currently involved in, but it's something that if the stock gets punished too much, we would be interested, because look, this is a high quality franchise. This will be a bit of an impediment in terms of short-term growth, but.
Oops. Okay. I think there's some issue with his video. Arvind, we'll just come back to you in a bit. So we got, what you're trying to say, that there is an impediment to short-term growth for Kotak Mahindra Bank, but not too concerned about Sure. Arvind, I think we can hear you again now. Go ahead. You were telling us about, your view on Kotak.
Oh, I'm sorry. My internet may have been a little slow. But yeah, my view is that, short-term growth may suffer, but I think any meaningful pullback for a high-quality bank like this would at some point be a buying opportunity.
All right, got that. The other positive is coming from Axis Bank. Very strong numbers, asset quality has improved. And, it just goes to show that the strength of these private banks is something that sort of continues, right? It's been 4 or 5 quarters now. We've had some really healthy numbers. Would you look to raise your investments or raise your sort of allocation to some of these private sector banks?
Yes, we like the high-quality private sector banks. We think that they have lagged a little bit in the last few quarters, and we are interested in high-quality banks, whether it's an HDFC Bank or it's or an Axis or a Kotak. Notwithstanding the short-term headwinds, these are places where, given how frothy some of the small-cap names have gotten, we're finding better opportunities in some of these areas. So yes, we think that this is a cycle where the loan-to-deposit ratio had gotten a bit of a problem. It seems to be getting to be less of a problem. And I think, again, if we're going to have, as we believe we will, a sustained economic cycle in India, then private sector banks are going to be at the forefront of it in terms of driving the financing needed for that growth.
Okay. Hi, Arvind. Good morning. Preference for the high-quality private sector banks. So we've spoken enough about the banking names. Let's talk about the other pillar of the market. That's tech. I have a couple of disappointments coming in there, whether it was Infosys, whether it's some of these other companies like Persistent System, LTIMindtree as well, Tata Elxsi, some of those mid-cap, mid-sized IT companies that grew very, very rapidly. Valuations seem to have become a headwind. And now some miss on results, well, they're getting pulled back. How do you approach the tech space here in India?
Well, I think that, we've been, frankly, not invested in the tech space. But if we get some pullback in mid-cap companies, the opportunities we're looking for is those who are going to be able to be beneficiaries of the whole, tech build-out in terms of the new AI world. And right now, we're not sure who is going to be able to benefit, because the big headwind, this is not the short term. Now I'm talking about valuation. If I'm looking out, we're looking at investment that makes sense 2 years from now, 3 years from now when we're investing. We're not buying for a trade. And if we're looking at that, one of the big headwinds is going to be that AI causing displacement to a lot of the low-level kind of programming that is done by a lot of these tech companies, particularly the big ones, which serve a lot of customers. And so that structural headwind has kept us on the sidelines. Some of the smaller companies, we're still trying to evaluate which ones are winners and which ones are losers. But I do think that you're right, that the valuation had run away from us, so we did not feel comfortable chasing after them. I think that the challenge, in our opinion, is trying to discern the winners from the losers, because let's be clear, unfortunately, a lot of the mass market kind of serving IT companies over the next 2 to 3 years are going to be facing structural headwinds from AI.
Arvind, just a quick word on the sort of global setup. I mean, equity market setup. Is this a risk-on phase? Is this a neutral kind of a phase? For example, the India Wix here sold off about 20% 2 days back, or day before yesterday. I mean, is that it? Because election results here are usually in May. This time they're in June, early June. No exit polls, nothing, all the way till early June. So is that indicative of a more quieter period here? I'm talking about the near term, month and a half or so. Arvind.
Well, in the next month and a half globally, I think we're in a kind of an in-between situation. Clearly, the Fed is on hold. And inflation data is looking questionable as to whether it's going to come down as quickly as expected. On the other hand, ECB may be ready to start cutting rates, and give more signals towards the rate cut coming. And then in India, you have this hiatus where, election uncertainty, a lot of good news in terms of assumption that there's going to be continuity on the government front is probably already in the stocks. So I think that this is going to be probably a period where, risk-on is not going to be a big dominant theme in the next month. So I think it's time from our standpoint, to be selective and to be opportunistic. I don't think this is a time to aggressively chase after equities. And we would use pullbacks from any global cues or any negative surprise in India, company-specific or otherwise, as opportunities to buy. But we're not super bullish about the next month, either globally or in India, given that investors are going to look for clarity on both global inflation front and India election front.
All right, fair enough. So you're not super bullish on this market at the moment, given the kind of run-up we've seen. Got that. Thanks a lot, Arvind, for joining in, and have a great day.